Tesla is determined to revolutionize the EV industry and sustainable energy. Today we're talking about why Tesla is the opportunity of our lifetime. Tesla is investing heavily into renewable energy. A new factory in Shanghai is set to produce megapacks. Tesla's ambitious plan to electrify the future is coming. If you would listen to Tesla short sellers and critics, you would believe that Tesla is dead in Europe. No demand, falling off a cliff. However, Tesla is actually gaining market share at a faster rate than any other automaker. And registrations are up. Volkswagen, yes, owns a higher piece of the European market and had the most market and growth in terms of units sold year over year. Tesla is the only automaker that has grown its sales from the prior year by more than 50%. Just this week, many analysts on Wall Street slashed the price prediction for Tesla shares, causing the stock to fall even more. Worrying about margins with all these price reductions. ARK's price prediction for Tesla for 2027 is $2,000, and it's catered to the robo-taxi and the recurring revenue of the FSD.
Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to one every 500,000 miles for the average car on the road.
Okay, so Kathy, hold on. Good afternoon, It's John Ford. I just want to clarify, did you say a $2,000 per share price target? Tesla right now is under 200 a share. So even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030. And is one of the most important investment opportunities of our lifetimes.
Analysts and Tesla bears are extremely short-term, close-sighted and are missing the bigger picture. Autonomy will happen, and it only depends on the time frame and regulations. It seems crazy that Wall Street is shocked for Tesla's lowering prices while sacrificing some of the margins. After all, Elon mentioned to do this last year. This move is about market share and moving ahead of the competition so they can never catch up with Tesla. And while I understand some big-time investment firms being pressured by their clients need to move their investments to other opportunities, Tesla is the opportunity of our lifetime, not this year or even next year, but in the future. EVs are moving to gain global market share.
They were worried about margin pressure. What are they missing?
Well, I think the concerns over margin pressure are very short-term oriented. We've heard Tesla say this, but we've actually modeled the opportunity in robo-taxis and autonomy. And if you look at the future of, Tesla vehicles that are capable, becoming robotaxi enabled, earning a recurring revenue stream at what we think will be software as a service like margins. This is an amazing potential for Tesla. It'll definitely be, the highest return on investment per battery produced, as we've analyzed in our new report up on our website. So I think that, again, this will totally change Tesla's margin structure in the future. They mentioned on the earnings call that they're prioritizing getting cars out on the road. I think that's a smart decision, as opposed to, keeping margins high and prices high in the short term. They just want to get as many cars out on the road as possible. Those cars feed Tesla's data engine, and that's what turns each of them into a fully autonomous car in the future.
Yeah, Elon said on the earnings call he thinks they could achieve fully autonomous this year. Is that your expectation?
So we have a Monte Carlo model with a range of assumptions. The midpoint of our expectation is in 2024. So it'd be later than Elon says. In our most bullish case, I think they could launch fourth quarter this year. But again, the real thing to look at here is, whether or not it's fourth quarter, whether or not it's next year or the year after that, this is an amazing opportunity. We think the market for robotaxis globally could be worth, $9 to $10 trillion in the next decade. So it's clear why Tesla is pursuing this opportunity. And again, with their data advantage and their verticalization, they really could be a leader here.
Traditional auto manufacturers are losing money with every EV sold, while Tesla is making about $10,000 for every car being sold. Of course, a group of shareholders are being concerned about CEO Elon Musk's leadership, not sure why this belongs in the investment news media. Just like a while ago, one shareholder demanded Elon to be replaced and he owned one share. Also in the investment media news. However, Elon has always been the CEO of Tesla, SpaceX, Neuralink, the Boring Company, OpenAI, but for some reason these investors are now concerned about Elon because of Twitter. Seriously, there's a simple solution to this problem. Sell your stock. Not one person forces you to buy and hold the stock. Manipulation at its finest. Elon is not distracted. His execution is just fine. Here are some different reasons why the stock is down. We haven't completely moved out of the bear market yet. And with the Fed increasing interest rates, we won't leave it anytime soon. Elon is preparing for a recession, and that's why he's lowering prices. He's trying to make things affordable.
So, again, the story here, if you take a step back, is really that EVs are gaining share. So Tesla was harping on this on their earnings call recently, that you should think of them as a share of the total global auto market as opposed to just the EV sector. Because again, in the future, it's going to be electric vehicles. So, my partner analyst, of course, has done a lot of great work looking at the electric vehicle market. We think that there'll be 60 million units sold in the next 5 years annually. And, that's up from, single-digit percentage points as a percentage of auto sales today. So I think that Tesla here is really in the lead. They have a multi-year advantage over competitors. It's, again, that verticalization strategy that keeps them in the lead. So we think on an efficiency basis, per cost for the price that you're paying for the car, they're still way ahead of the competition. And, I'd be pretty scared if I were a traditional automaker right now and I saw Tesla cutting prices, I'll tell you that, because not all of these platforms are profitable at other automakers yet.
Yeah, they have some very slim margins, do those traditional automakers. So there are the margin concerns. There's also this group of shareholders that own a combined 1.5 billion in shares. They're concerned about something else, and that is a distracted CEO, of course, Elon Musk. They write in this letter to the board, "We have grown increasingly concerned with governance and leadership issues at the company. Tesla needs a board that will ensure that the CEO is focused on addressing its challenges." Are you concerned about Elon Musk being distracted with Twitter, SpaceX, and everything else he takes on?
Well, it's not a surprise to us to see him tackling many issues at once. As you mentioned, SpaceX, he was one of the founders of OpenAI. We've seen him spread out his responsibilities among his companies, and really, what do we have to go off of? It's his execution. Look at Tesla's progress today from 5 years ago. Again, it's the leading company in electric vehicles. We also think so in autonomy, and I think he's a really crucial figure to actually crossing that finish line to creating a fully autonomous car. So we have full confidence in him as the leader of Tesla, and in fact, we'd be more worried if he were stepping away from his responsibilities. So I think that while yes, it's shocking that he's able to manage this many companies at once. This isn't something that we haven't seen him do before.
You're happy if he stays on board as CEO of Twitter beyond this year?
Yeah, so we are invested in Twitter in our private fund here at ARK. So I think that a lot of the ideas that he's put forward there to have the potential to really change the company and particularly the payments platform aspect of things we're pretty excited about. And our fintech team has done a lot of research there. But again, I think going back to Tesla, I'm not concerned with him splitting his time. We're going off of his execution here, and he's been an amazing leader. He's built an auto company that's really unrivaled in its autonomy and AI advantage, its software advantage, and its battery advantage.
And of course, we can all see that the financial media is not helping, as we can see. So according to MarketWatch, electric vehicles will cut oil demand by 5 million barrels per day as soon as 2030 and hopefully sooner. The internal combustion engine has gone unrivaled for over a century, but electric cars are changing the status quo, said the International Energy Agency. And just recently, on Wednesday, Elon Musk met with South Korean president in Washington, D.C. The meeting took place at Elon's request. The president asked Elon to build factories in South Korea and mentioned if Tesla would to invest, that South Korea will provide active support in terms of location, workforce, and taxes. The president also voiced the hope of a greater cooperation between Korean businesses and SpaceX. And this is the exciting news of this week. And if you would like to know how to retire by 2027, maybe you should watch this video next. Thank you so much. I will see you next time.